If I gave you two people making $4,000 a month, one stays broke, the other builds funding, business credit, and wealth. The crazy part? Same paycheck. Watch this split. Chaos versus control. Most people believe the key to wealth is making more money. But what if the real secret isn't making more money? What if the real secret is using the money you're already earning more strategically? Most people receive a paycheck every week or every 2 weeks. The money hits one account, bills get paid, the rest disappears, and the cycle repeats. But successful people often use their paycheck differently. They use it to build banking relationships, savings, business credit, and future funding opportunities. Let's start with one of the most overlooked financial strategies, banking relationships. Banks don't just look at credit scores. They look at history. They look at deposits. They look at consistency. They look at average balances. Many people send their entire paycheck to one account. But imagine receiving a $4,000 paycheck and strategically splitting it. 50% goes into Bank A. 50% goes into Bank B. Now both banks see activity. Both banks see deposits. Both banks begin building a relationship with you. Over time, consistency creates familiarity. And familiarity often creates opportunities. The next hidden gem is timing. Most people apply for funding when they need money. That's backwards. The strongest borrowers build their profile before they need funding. They reduce utilization. They improve account history. They establish banking relationships. Then they apply from a position of strength. Timing matters. Many successful borrowers pay down balances before statement dates, so lower balances report to the credit bureaus. The difference between a high utilization profile and a low utilization profile can dramatically impact approvals. Now let's talk about savings. One of the smartest moves you can make is opening a high-yield savings account. Instead of allowing money to sit idle, your money begins earning interest. Imagine automatically sending part of every paycheck into a high-yield savings account, month after month, year after year. You begin building an opportunity fund. That opportunity fund can be used for emergencies, investments, business opportunities, or future growth. The goal is not simply saving money. The goal is creating options. And options create freedom. Now let's move into the most powerful strategy for creating true financial leverage, a strategy that most people overlook until it's too late. We're going to talk about building your business. If you want real leverage, you need to build a second lane for financial growth. Relying solely on your personal credit is like driving on a single-lane highway. Any slowdown affects everything. A formal business structure creates a parallel highway, allowing you to build momentum and access opportunities independently of your personal finances. This isn't just about making money. It's about creating a separate, powerful entity that can build its own credit, secure its own funding, and protect you along the way. The foundation of this entire strategy starts with forming a limited liability company, or LLC. An LLC does exactly what its name implies. It limits your personal liability. It legally separates your business identity from your personal identity. This is the critical firewall. If your business ever faces debts or legal challenges, your personal assets, your home, your car, your personal savings are protected. This separation is the first and most important step in building a resilient financial future. After obtaining your LLC, your next immediate step is to secure an employer identification number, or EIN, from the IRS. Think of your EIN as a social security number for your business. It's a unique 9-digit number that establishes your business as a distinct entity in the eyes of the government and financial institutions. You'll need it for everything that comes next: opening a bank account, applying for credit, and filing taxes. It's completely free, and you can get it in minutes directly from the IRS website. The next step is obtaining a professional business address. This is about perception and credibility. You don't need a physical office. Many entrepreneurs use virtual business addresses through services such as iPostal1 or a local provider. For a small monthly fee, you get a real street address in a professional building, which enhances your business's image and protects your home's privacy. A professional address often creates a stronger business image than a residential address, signaling to banks and vendors that you are a serious, established operation. After your LLC, EIN, and business address are established, you must open a dedicated business bank account. This is non-negotiable. Do not commingle your funds. Mixing personal and business expenses in one account can destroy the legal protection your LLC provides, a concept known as piercing the corporate veil. A separate account is essential for clean bookkeeping and demonstrating financial discipline to lenders. Start building the relationship with your business banker immediately. Don't wait until you're desperate for a loan. Consistency matters more than size. Even small, regular deposits show the bank that your business is active and stable. This history is what bankers look at when you eventually ask for funding. With these foundational pieces in place, you can now begin building your business's credit profile. The first step is getting a DUNS number from Dun & Bradstreet. This is another free, unique identifier that is globally recognized and used by lenders and suppliers to assess a business's credibility. Once you have your DUNS number, you need to monitor your profile. Services like NAV allow you to see what lenders see, tracking your business credit scores and the accounts reporting on your file. This is like having a GPS for your business credit journey. Now, it's time to build history. You start by opening vendor or trade accounts with companies that report to the business credit bureaus. These are often called Net 30 accounts, where you can buy supplies now and pay the invoice within 30 days. The key is to always pay these invoices early, ideally within 7 to 15 days. Paying early is a powerful signal to the credit system that your business is reliable and low risk. Each early payment is a positive data point that builds your credit score, opening the door to larger credit lines, business loans, and better financing terms in the future. This is how you build that second lane of growth, brick by brick. Now let's discuss business credit. This is the strategy that almost nobody uses, yet it's one of the most powerful ways to position yourself for future funding and create a clear separation between your personal finances and your company's growth. Most people only focus on personal credit. They spend years building their FICO score, worrying about utilization rates and payment history, all tied to their Social Security number. They use personal cards for business expenses and sign personal guarantees for everything, putting their family's assets, their car, their home, at risk. This approach keeps them trapped, limiting their borrowing capacity to what their personal profile can handle. But business credit creates a second path to growth. It allows your business to build its own credit profile, completely separate from your personal one. This means your company can qualify for financing based on its own merits, its own revenue, and its own payment history. It unlocks higher credit limits and better terms than you could ever secure on your own. This is how you build a financial fortress around your personal life while creating a launchpad for your business. The journey begins by establishing your business as a legitimate, separate entity. This isn't just paperwork, it's the foundation. You need to open an LLC to create a legal shield. Then, get an employer identification number, or EIN, from the IRS. This is your business's unique Social Security number. With those in hand, you must open a dedicated business bank account. Never commingle your personal and business funds. Every transaction must prove your business operates independently. Once your business is a distinct entity, one of the first critical steps in the credit building process is obtaining a DUNS number. This is a unique 9-digit identifier for your business, provided by Dun & Bradstreet. Think of it as the key that unlocks the world of business credit. Without a DUNS number, your business is practically invisible. It allows business credit reporting agencies to begin tracking your company's financial behavior and compiling its credit file. Then, to see what the bureaus see, establish a NAV account. You can't improve what you don't measure. NAV helps you monitor your business credit profile from multiple bureaus in one place. It translates complex data into actionable insights and can help identify funding opportunities that are the right fit for your business's current stage and credit strength. It's your command center for building business credit. Next come vendor accounts, also known as trade lines. Vendor accounts are one of the easiest and most effective ways to establish a positive business payment history. These are suppliers who extend you credit, often on net 30, net 60, or net 90 terms, for things your business already needs, like office supplies, shipping materials, or web services. The key is to find vendors that report your payment activity to the business credit bureaus. When you get these accounts, the rule is simple. Pay vendors early, and pay vendors consistently. If an invoice is due in 30 days, paying it in 15 or 20 sends a powerful signal to the credit bureaus. It shows your business is financially healthy and reliable. This positive payment history is the lifeblood of your business credit score. Each early payment is like a vote of confidence, building a stronger and stronger profile over time. And stronger business credit creates larger opportunities. It opens doors to bigger loans, better credit cards, and more favorable lines of credit, all without touching your personal credit score. Now, one of the hidden gems many entrepreneurs overlook is retail business credit, like the Sam's Club Business Credit Program. This is a brilliant 2-for-1 strategy. Many business owners use these accounts to establish an additional business credit history while purchasing the supplies, inventory, and operational items they need anyway. Whether it's stocking up on office, coffee, buying new equipment, or managing inventory for a retail shop, every purchase made on terms and paid back on time contributes to your business's credit file, further strengthening its financial reputation and preparing it for the next level of growth. The biggest lesson is this: business credit and personal credit are not the same. A properly structured business can create opportunities that help protect your personal profile while positioning the company for growth. Most people focus only on making money. Very few focus on building systems. The people who win financially build systems. Let's start with one of the most overlooked yet powerful financial strategies: cultivating deep banking relationships. Most people treat their bank like a simple storage unit for their money. Paycheck comes in, bills go out, and the relationship ends there. But this is a monumental mistake. Banks don't just look at your credit score when you ask for funding. That's a lagging indicator. They look at your history with them. They analyze your deposit patterns. They value consistency. They pay close attention to your average daily balances. They are building an internal profile on you, a score that no credit bureau can see. Now, imagine you receive a $4,000 paycheck. The standard approach is to deposit it all into a single checking account at one bank. But the strategic approach is to split it. 50%, or $2,000, goes into Bank A. The other 50%, another $2,000, goes into Bank B. What have you just accomplished? You've doubled your visibility. Instead of one institution seeing a $4,000 monthly deposit, 2 separate institutions now see you as a consistent customer with reliable income. Both banks see activity. Both banks see stability. You are now simultaneously building a positive history in 2 places, not just one. This simple act of splitting your direct deposit lays the groundwork for future opportunities. When you eventually approach them for a credit card, a personal loan, or a line of credit, you're not a stranger walking in off the street. You're a valued client with a proven track record of deposits. Funding begins with relationships, not desperation. The strongest borrowers understand that building a powerful financial profile happens long before they ever need to ask for funding. It's about proactive management, not reactive panic. One of the most impactful techniques involves mastering your credit utilization. Many people mistakenly believe that as long as they pay their credit card bill on time, they're doing everything right. But there's a hidden timing element that separates the novices from the pros. Most credit card companies report your balance to the credit bureaus on your statement date, not your payment due date. This means if you max out your card during the month and wait until the due date to pay it off, the credit bureaus will likely see a report of very high utilization, which can significantly damage your score. The strategic move is to pay down your balances the statement date. Many successful borrowers make a payment a few days before their statement closes, ensuring that a much lower balance, ideally under 10% of the credit limit, is what gets reported to the bureaus. This single action can cause a dramatic short-term increase in your credit score. You're not just paying your bills, you're curating the data that defines your creditworthiness. You are actively shaping the narrative that lenders see. By consistently reporting low utilization, you demonstrate financial discipline and control, making you a much more attractive candidate for prime lending products and favorable interest rates. Now, let's talk about savings, but not in the way you're used to. We're not just putting money aside for a rainy day. We're building an engine for opportunity. One of the smartest, simplest moves you can make is to open a high-yield savings account, or HYSA. Unlike a traditional savings account that might offer a paltry 0.01% interest, an HYSA can offer rates 20, 30, or even 50 times higher. This difference is the key. It's the difference between your money sleeping and your money working for you. Imagine setting up an automatic transfer, sending a portion of every single paycheck directly into this account. It doesn't have to be a huge amount. It just has to be consistent. Week after week, month after month, your balance grows. But it's not just growing from your contributions. It's growing from the power of compound interest. The interest you earn starts earning its own interest, creating a snowball effect that accelerates your wealth accumulation over time. This isn't just an emergency fund anymore. This is your opportunity fund. When a time-sensitive investment appears, a business idea strikes, or a chance to acquire an asset at a discount presents itself, you won't have to say, "I can't afford it." You'll have a dedicated pool of capital, ready to deploy. Opportunities don't wait for your next payday, and with a well-funded HYSA, You won't have to either. If you want to unlock true financial leverage and create a clear separation between your personal assets and your business activities, you eventually need a formal business structure. This is the path to building business credit, a parallel financial identity that can secure funding without putting your personal credit at risk. The foundation of this entire system starts with forming a limited liability company, or LLC. This creates a legal entity separate from yourself, protecting your personal assets. After your LLC is approved by the state, you must secure your employer identification number, or EIN, from the IRS. Think of the EIN as a social security number for your business. It's essential for opening accounts and filing taxes. Next, you need a professional business address. Using your home address can appear unprofessional and may violate zoning laws. A virtual address is an excellent, low-cost solution that provides a professional mailing address and mail handling services. With your LLC, EIN, and business address established, you can now open a dedicated business bank account. This is non-negotiable. It keeps your finances clean and begins building that crucial banking relationship for your business entity. Now, the credit building begins. One of your first steps is to obtain a DUNS number from Dun & Bradstreet, which is the primary identifier for business credit reporting. Then, establish an account with a service like NAV. NAV allows you to monitor your business credit reports and scores from all major bureaus, so you can track your progress. The easiest way to start building a file is by opening vendor accounts, also known as trade lines. These are typically net 30 accounts with companies that sell business supplies, where they give you 30 days to pay an invoice. By purchasing small items and, crucially, paying the invoices early, these vendors will report your positive payment history to the business credit bureaus. This creates a track record of reliability, building a strong business credit profile from the ground up, and opening the door to larger and more significant funding opportunities in the future. Your paycheck can become more than income. It can become a funding tool. It can become a relationship-building tool. It can become a wealth-building machine. Start small. Stay consistent. Build relationships before you need them. Build credit before you need it. Build savings before opportunities appear. Because when opportunity arrives, preparation wins every time. Let's say you make $4,000 per month. You send $2,000 to Chase, $2,000 to Truist, and automatically move $400 into a high-yield savings account. After 1 year, you've built banking history at 2 institutions and created an opportunity fund that can be used for emergencies, investments, or business opportunities. Most people wait until they need funding to build relationships. The wealthy build relationships before they need funding. What's your biggest financial goal for the next 12 months? Business funding? Credit repair? Saving your first $10,000? Comment below and I'll respond with the strategy I'd use.